Good morning, everyone. This is Bruce at Fleet Capital Management. It is Saturday morning, July 16, 2022, coming to you from beautiful Bellingham, Washington, where it's about 69 degrees and overcast, which in my world is perfect given how hot it is around the country. Not a lot to show you today, but I do want to show you what the charts are suggesting to me. And I found some interesting things on the weekly chart that I want to show you. We don't look at that enough. First, must read that the video presentation is intended for educational purposes. The discussion of any security is not a recommendation to purchase or sell the security. Please feel free to subscribe to the YouTube channel. You'll always have access to these videos. And if you have a question about anything at all whatsoever, please email me, Bruce at Fleet Capital Management, with anything you'd like to discuss. Before we go to the charts, a very quick review of how our two largest buffered ETFs are doing. Just a reminder that the dark line is the investment that I have you in, and the light line is, in this case, the NASDAQ 100, or what we call QQQ. So we're comparing our investment, which is based on the Qs, to see how it's doing. Also a reminder, if we fall within the gray area, which is a 15% buffer, and you can see the investment is clearly in the gray area. What that means is on date of maturity, this responds back to zero. So you would have zero loss minus their embedded fees for doing the trade. As of Friday, the fund is down 10.5%, which is clearly in the gray area. And the Qs, the NASDAQ, down 19.5%. So like I always say, even if this didn't go any further, that's a pretty strong rate of return, especially on the downside. You've saved almost half, or 9%, I should say, of your value compared to if you were just in the Qs alone. But that's not where it ends, because remember, this reverts back to about zero, or 0.79% to be precise. So you really don't have these losses as long as we stay in the gray area. If you still have questions about that, just let me know. More than happy to discuss it. This is BAPR, which is our another one of our very large holdings. This one, you can't see it under the line, but it has a 9% buffer. Anything with a B in the symbol, BAPR, is a 9% buffer. Any other first letter is a 15% buffer. You can see we're just a hair below its buffer zone. We're down 10.16%, and the S&P 500 is down 14 in about 3/4. But remember, on date of maturity, this you would snap back. You would be refunded, basically. This would snap back to zero minus their internal fees, which are about 0.79. So, you know, is this one at a loss if we were at maturity? Yeah, we'd be down about 1%, but the market's down almost 15%. So I just don't see that as a negative. The negative is when you check your daily or monthly values on advisorclient.com or your statements, it shows a full loss as if you sold it today. That's the way we're required to report it, but we're not selling it today. We're going to wait until maturity. Okay, and again, any questions, just call me. We can discuss this specific about your account. Lastly, if you'd like to get a hold of me, it's really easy. Go to our website, click on More and Bruce's calendar. And as a matter of fact, I'm going to change this slide because I have now put a Meet with Bruce button on the home page. So I'll need to change this slide. It's still here. But I'm trying to make it easier and easier for you to contact me if you would like to discuss your portfolio or if you have any questions. Okay, let's go over and take a look at some charts. We're going to look at the S&P 500, and you may see SPX or you may see SPY. They're both the S&P 500. Just one is the index and one is the ETF of the index. And what you'll see is a couple of things. We still have the 20-day below the 50 and the 50-day below the 200. So technically speaking, on a moving average basis, we're still in a bear market. There's just no question about that. The ATR dots, remember there's two rows. If they're red and purple and we are below that, we are still in a clear down market. We've tried a couple of times to get above this lowest row, which is the first step of the ATR dots. And then we need to get above this row of the ATR dots, and then it'll switch and we'll be in a bullish environment. But right now we're not. This chart still show we're in a negative environment. couple interesting things. I drew a line from what I believe will be the low and tried to capture some other lows. And I drew this line, and if you extend this up, we're still above that trend line. What does that mean? This is, in a very, very short sense, this is an uptrend that's trying to develop. On the RSI, we're still below the 55 line, which is that gold line. So that's a negative. On the TSI line, we're still below the 0 line. That's a negative. And all this means is we're still in a downtrend. But I want to show you one more thing, and then we're going to go to the weekly chart. I constantly talk to you about support and resistance. This, again, is the SPY. It's the S&P 500. But this chart draws support and resistance lines automatically. The computer does that. So down here, this is called support. This is like a floor. It's kind of a floor that the market tends to bounce off of until it's broken. And this is resistance. You can see it went right back to that level and then bounced back down, came right down to here. So we're in this really compressed support and resistance line. We need to get price above this resistance line and then eventually above this resistance line for us to be in what I would consider a bullish trend, but we're not there yet. So we're still waiting for some of these markers to show us. Going to the charts, I want to show you a weekly chart. Let me just double check. Yes, this is a weekly chart. And let me blow this up for you so it's a little bit easier to see. So on this weekly chart, each bar represents a week of trading. And generally speaking, you can clearly see that this is an uptrend. And remember that the little dash to the left of each one of these bars, let me find one that's easy to see. There's a dash to the left and a dash to the right. The dash to the left is where the market opened on that day. The dash to the right is where the market closed on that day. And then the rest of the vertical bar, or the vertical bar, is where the market price traveled that day. So in an uptrend, it is most common that the close is in the upper half of the bar. That one's not. This one is. That is. That is. That is. That is. That's not. That is. So you can see the preponderance of time, the close is in the upper half of the bar. Not always, but probably 85% of the time. Now remember, we're looking at a weekly chart right here. This is kind of interesting. Look at the last 2 weeks. This is the week that just ended yesterday. Market opened, and yeah, the market was down for the week, just a skosh, but the market had been down during the week significantly more, and it's closing near its high. The week before, market opens, it travels all around, but it closes near its high. The week 4 weeks ago, opened down here, closed near its high. Now, not everyone does it, but boy, if you look at these last 2 weeks, I don't know, that could be looked at as a bullish trend based on, not a trend, but a bullish signal based on a weekly trend. I like what I'm seeing on that weekly chart. On the daily chart, you will remember this is called Go No Go Trend Pro. And just to remind you, the colors of the bars, there's 5 colors. The dark purple is a strong downtrend. The light purple, we'll call it, or pink, is a weak downtrend. So all the colors since the beginning of the year have been light and dark, and mostly dark. And remember that the amber color bars are kind of a transition color. That means we may be going from a downtrend to an uptrend, or an uptrend to a downtrend. But what we need to see here is, and these are daily bars, this was yesterday, this was Friday, we kind of need to get above, remember that resistance line that's somewhere right around here? We need to get above that resistance line. And we're just not there yet. So once again, and I will show you, oops, I didn't mean to do that. Let me go over here to my trend analysis page. I update this every day, and each column, there's the go, no go trend, which we just looked at, which is in a no-go. Here's 8 and 21 simple moving averages are still in a downtrend. These are all the different signals I look at. Some are really short-term. ST means short-term. they're in a downtrend still. And then I've got medium trend, which would be the DO and maybe the RSI. Then I have long trend. So the only benefit to me, this is really isn't for you, is that instead of looking at, well, I still have to look at each individual security to update it, or each individual indicator to update it, but I can see it as a whole that we're just all red. We're just in this very downtrending market. Do I believe that we're getting close to a bottom? Well, I sure do. Let me go back to, this is a daily chart. Pardon me, I'm going to try to fit it all in here. Here's a daily chart, and this low right here, which was a few weeks ago, I said that this may end up being the very bottom of the market. We had a run up and then we came down about 50%, which is normal. Remember when we looked at the Fibonacci retracements, it's pretty normal to come back down about 50%. And then we ran up and then we came back down maybe a little bit more than 50%, which is fine, even if it goes to 61.8. And then it started to run back up. What's going to happen next week? I don't know, but we need to break this area to the upside. But if you were to, let me grab a pen. If you were to, bear with me 1 second here. Let's draw this. Let's see, I think it'll be blue. Yeah, there we go. If we draw a line across this bottom, which is above the bottom that I feel will be the historical bottom of this bear market, but we don't know yet. We just don't, it's too soon. Does this look like we might be forming another bottom? Here were those support resistance lines that we looked at on another chart. If we can break above this one and start to make a higher high, you know, somewhere around here, and we are potentially making higher lows. If I draw a line here, this could end up, it looks a little bit bullish to me, but we're just going to have to wait and see. But I'm just saying this kind of looks like a bottom. I had a client, I actually hate the word client. I prefer the word friends because most of you are friends of mine. We've known each other for a very, very long time. But I had a friend / client contact me the other day, and he said, it seems like the market goes down every single day. And I understand that sentiment, but this is a couple of weeks, and you can see it doesn't go down every day. It goes down, it goes up, it goes down, it goes up. But the reason it feels like it goes down every day is because in the study of behavioral finance, when the market does go down, or your value of your account does go down, that elicits a much stronger negative emotion than when the market goes up, which generally generates a weaker positive emotion. So our brains tend to think that it's just going down every day, and we kind of discard when it's going up. But it looks to me like we're going sideways, and you can see that here with these lines. And remember, the market can only go one of three ways. The market can go up, it can go down, and it can go sideways. That's it. That's all it can do. And a sideways period is called a consolidation period. And the longer it consolidates, the longer it goes sideways, the stronger the breakout tends to be. So here's the question. Will the breakout be to the upside, or will the breakout be to the downside? We don't know yet, but it does seem to look like we're in that consolidation, and it does seem to look like we might be trending higher. We're trying to trend higher. So a little bit of optimism there based on these charts, and we'll see what happens. One other thing I want to show you, one last thing I want to show you is last week's video, I looked at ARK, A-R-K-K. This is an investment that made us a huge amount of money. Let me get rid of these lines, clear all the lines. There we go. Made us a huge amount of money. And then we got out of it when it started to fall. It has now fallen about 70% from its high. Right now, look how sideways it's going. It's in a consolidation. And look, we have a blend of the ATR. We have the dark and the very light. So this is no longer in an ATR downtrend. It's in an ATR sideways trend. Remember, if it was down, we'd have pink and purple, and we would be below it. And we've been in a downtrend for a long time. We're now in a sideways, kind of like the market is, but this does look like it wants to break higher. This TSI indicator, which is kind of a long-term trend indicator, is now above 0. That's a real positive. The RSI looks like it wants to break again above, it's trying, it did for a couple of days here, to break above this 55 mark, and those are bullish indications. I can tell you that if this price gets above that ATR, and we switch back to bullish ATR, and if the TSI is above 0, and if the RSI is above 55, the more aggressive accounts are going to start to nibble back on this investment, probably to the tune of about 5% of our portfolio value, and see if we can't ride this wave back up that I believe is coming. So we'll see on that. And then the very, very last thing I want to show you, for all of you who trade options with me, this is the new option system that I've created, and you can see if it's green, every one of these options has been positive. Each one of these trades, and the average holding period has been about 3 days. And then I go over here, that was on the SPY, this is on the SPX. Every one of them has been positive. Now, how long will everyone be positive? I don't know. Will we have a loser? Absolutely, we will. We're targeting 70 to 80% win rate. Right now, we're at 100% win rate. But the key is we're averaging about 18% per win. I'm trying to get our losses to be really close to break even, or maybe down 5%. But that means that our wins percentage-wise will be much greater than our losses. And it means the percent of wins will be greater than our losses. So for those of you who are trading, I suspect you're happy with that. And remember, these types of trades are trend agnostic. We don't care if the market's going up or down. We're just looking for very, very short-term signals. Like BCS, that was a bullish. We're in a downtrend, but this was a very short-term bullish move. BPS, there's only C and P. C is a call, which is bullish. And excuse me, I've got this backwards because since we're selling, the C is a down market, the P is an up market, and you can just see the point is we have both. So it's trend agnostic. It doesn't really matter. I've just recently started to trade this system on individual stocks, and I'm not trading this for clients yet. This is the first one I did. This is on Philip Morris. It gave us a signal, and we were in it for 2 days, and we averaged about 18.75%, which is pretty much what we've been averaging across the board. I'm going to do these options trades on individual stocks, probably another 4 or 5, just to see if I'm getting a trend. And then I'll start trading them in client accounts, just like I'm trading these on the SPY in client accounts. So the options trading has been working very well. Anyone can participate. It is a little bit more aggressive to trade options, but I think the system that I've created is showing that aggressive is not meaning negative. Aggressive is not meaning losses. Aggressive is just they're very short-term trades, and you can lose with options, but they're working very, very well for us. So anyway, I don't want to take too much of your time. We're in a downtrend. There are some signs that the market may be trying to break back to the upside. If it's going to happen, I think it'll happen in the next couple of weeks because it's earnings season, and that normally takes place during earnings season. Let's see if we can't bust through some of these things and finally get back into an uptrend. But either way, we're doing fine. We're protecting ourselves on the downside. We're making money on these short-term options. And when the market goes up, we're making more than the market. When the market goes down, we're losing less than the market. And that's exactly what we want to see. So call me, email me, schedule a Zoom meeting. Always happy to chat with you and go over your individual account. And until then, I will be back with you Monday morning. Talk to you soon. Bye-bye.